And we are back for another Thursday of State of Mind. And today we are joined by Wayne Dickerson, owner of Direct Mortgage Concepts. How are you today, Wayne?
Oh, I'm great, Andrew. How are you?
Yeah, we're
Thanks for
absolutely
jumping on.
Yeah, thanks
No
for
worries.
coming on today. Really want to just get around you've been in the mortgage industry for a long time. And
Absolutely.
can you give us a bit of a background on Direct Mortgage Concepts? What do you guys do? The background, the history. Can you give us some insights?
Yeah, absolutely. Yeah. So basically, we're mortgage brokers. So as a mortgage broker, you deal with multiple lenders. So prior to that, I was actually working for one of the banks, and obviously, as a mortgage broker, you've got a lot more opportunity to address different policies and products and what have you through a wider range of lenders. Direct Mortgage Concepts was founded back in 1999. The company is basically myself, and I've got an offsider by the name of Megan, who looks after my loan processing and back office stuff as well. So we primarily do residential mortgages, which would include home loans, investment properties, and the like. That's our core business. We can do other stuff as well, but we try and sort of stick to the core business because we find that's the best way for us to go.
Yeah, I think it's currently at the moment with one thing I really want to touch on today is that with all the media out there and the headlines, being founding it's back in 1999, you've obviously had conversations and you've seen a lot of media and uncertainty out there. What are kind of some of the conversations that are they sort of the same? Like, are they the same sort of conversations that you're having at the moment? And what kinds of conversations are you having that when helping people either buy their own home or an investment?
Yeah, well, I guess the topical thing at this point in time with the rising interest rate market is the bit of fear mongering and what have you that the media often puts out there, and as I sort of mentioned to a lot of people, there's almost a generation of people out there now. Pretty much anyone who's from the ages of sort of being able to borrow at 18 right through to about 30 that's never really seen an interest rate rise. So it's a scary thing for those sort of people because they've not really ever had to sort of look closely at their budget because year on year interest rates have been fairly cheap. So therefore they've generally had a pretty good disposable income there for those sort of luxury items. But now that tide's turned a little bit, they need to now focus on, well, okay, if you've got to save a few dollars, where do you actually save that from? So I like to break it down, and when I talk to customers in particular, I like to break it down along the lines of, well, okay, there's essential things in life that we need. Obviously, you got to feed yourself and your family, put a roof over your head, clothes, fuel, keep warm, car to get around, and all that sort of stuff. They're the essentials that you really can't do without. But then there are those luxury items that we've all taken for granted, I guess, over the last 10 or 12 years. Things like eating out, holidays, caravans, boats, and all those sorts of things that
Golf,
have come
social
pretty
events.
easy. Oh, golf social events. No, they're essential. You've got to put them in the right category. No, but yeah, it's just a matter of knowing where you can and can't trim your budget and drilling down into what you actually spend. And look, doing a budget's not necessarily about, you can't spend any more than you actually budget for. It's more about knowing where you do spend your money.
It's knowing all that outgoing and making sure that you're spending it in the right spots and saving a little bit for that rainy day because there's talks about some of the rates rising up to 3.5 to about 5%. Is that, how do you see that, and where's that going?
Yeah, look, that's pretty realistic. But when you look at the average variable rate, cost to customer, so I say over the last 10 or 12 years, the average is probably somewhere in the vicinity of around about 6%. So where we are at the moment, you're probably sort of looking at sort of high threes. You can still get high threes. But look, the expectation when you listen to some of the bank economists and the people that are in the industry, they're sort of expecting that the cash rate will probably rise to the extent where it'll push the home loan, the standard home loan for mums and dads, up to somewhere around about the 5% mark. Look, no one knows for sure, obviously, because it's a fluid thing, and obviously there's decisions being made around those sort of figures on a day-to-day, week-to-week basis by the powers that be. And I guess depends on what happens with inflation. That's the key thing, because inflation as it stands at the moment is probably one of the biggest issues that we have. And that's the reason why our interest rates are now pushing up, to the levels that they are, and potentially a little bit further.
Yeah, with it's such, and also like shelter, it's such a big need as well, and having the great Australian dream and owning your own home, but there's also those out there that the red festers as well, and having assets that you've got. From what I read is that a lot of, like 60% of GDP comes from property. Like
Yep.
like all the taxes and everything. You got to have those things ticking along. So when you see these headlines of things are going to plummet and crash, they kind of you kind of got to see that. I guess obviously the government that wants to soften it, and they'll soften it and pull out whatever they can. What is it around having those conversations with people around, I guess, owning, like if you're looking to own your own home,
Mm-hmm.
Trying to work out exactly what the question is here, because it's such a, around it. And this is one of the things that I've been trying to wrap my head around too, because I have these conversations with people. But it's such a big commodity to have a roof over your head. So when people, I don't actually know, I don't know what the actual
Just
question
go
is
for it.
here.
So,
and it's
There'll be a
more
question
around.
coming sooner or later.
Sorry, it's coming sooner or later. And this
later.
is my thought process. my thought process. Laying it all out there, but at some point, like, government has got a lot of control over the market. So, over the years, how have you seen those big plummets of, or where do you see those big plummets of, like they're saying there's going to be 20%, 30% crashes?
Yeah. Well, look, there's always a spruiker out there that's willing to put their hand up and say the property market's going to crash and we're all in dire straits and all that sort of stuff. That's been going on forever and a day. And, look, that's not to say that it can't happen. But historically, if you look at property year on year for the last 100 odd years, the property prices in Australia are doubling pretty much in a lot of areas, or most areas, every 10 to 12 years. And that's a conservative figure. So I guess no one knows for sure, what prices are going to be next year, next month, or whatever. Because if we knew that, none of us would be sitting around doing what we're doing now. We'd be making a lot more money knowing what's actually going to happen for sure. But that can't happen. So I think too many people listen to the wrong people, and the wrong people are people, everyone's entitled to an opinion, of course. But I always say to people, you listen to everybody, but you actually take notice of the opinions of people who are educated in that particular area. And that goes, for so many things in life, not just what we're talking about now, in terms of property prices as they are at the moment, we've been through quite a sharp increase in value of properties going up, pretty much right across the board. And look, that's not sustainable at those levels, obviously. I think you don't have to be a rocket scientist to work that out. But usually when you look at when property prices go up sharply, there's a level of conservativeness for a period of time after that. That doesn't necessarily mean that it's going to go backwards. It might go sideways. It might fall off in some areas, just depends. It'll depend on a number of things because every area is different. The infrastructure is different in every area. There's more employment in certain areas. But underlying that is the demand for property in Australia. The demand for property in Australia is very, very high. And that puts a lot of pressure on the prices the way they are, puts a lot of pressure on people because of those prices. They struggle to save enough to get into a property because of the deposit that they actually need to achieve to be able to do that. And that puts pressure on the incumbent government to take care of housing policy and, trying to get people into properties. There's been some good schemes over the last few years that have worked really well. The old first home loan deposit scheme, and then there's the home loan guarantee scheme, which is recently taken over from that. So that's all about first home buyers who qualify, fairly standard sort of qualifications to get into that, within some criteria in terms of the property prices and the like. But essentially, rather than have to pay mortgage insurance when you're borrowing more than 80%, these schemes for a limited number will actually allow the government to guarantee your loan up to 95%. Now, the good thing about that is you might be looking at buying a property which is sort of, $600,000, $700,000, $800,000, even up to $900,000. But what it means is that you can do that with a 5% deposit, but then you're not getting stung by another $20,000 in mortgage insurance on top of that. So, essentially, an example I often say, I did a loan earlier on for a couple who got into a property in just outside of the Sydney area, got into a property with a limited deposit. They were probably needing to save a little bit more if they didn't get into this scheme, but they were able to get into that property at a certain level. And now 18 months later, they've now got over $200,000 in equity in that particular property. So, that's a great example. And as I say, I use that all the time, particularly when I'm talking to first home buyers, because one of the most difficult things with first home buyers is it just seems so hard and so far away. So you need to set some goals, and then you need to break those goals down into small chunks so that you can sort of make them achievable, and it doesn't become too daunting to the extent whereby you just don't go on with it,
So, and getting education. So education at the moment, having those conversations with people and building those relationships.
Building the awareness around it. Building the awareness is really important.
Yeah, well, that's a lot of what we do is, particularly for first home buyers, is educating them. You educate them to the extent of sort of saying, well, okay, this is what the banks are looking for. This is where you need to be. So what we need to do together is to get all these ducks lined up so that when the time comes, whether it be now, whether it be in 6, 12 months time, that everything's in order so that you can go bang and just hit the thing and make it happen. You don't have to then try and rearrange everything, at that point in time where you're wanting to actually make a move.
What are the banks looking for at the moment?
Well, essentially, the three main things that banks look for, they're going to look at your income, because that obviously determines how much you can afford to repay. The other important thing is having something behind you by way of some savings. And, as I say, with some of these schemes, you only really need a 5% deposit. But otherwise, if you can get as much as possible is the ideal. But, for an owner occupier, someone who's going to live in the property, 5% will get you in, 10% is better. But otherwise, if you can put 20% in plus your costs and borrowing, therefore, 80% of the value of the property that you're buying, it does work out a bit cheaper because you're not having to then fork out money for mortgage insurance. Because that mortgage insurance protects the bank, it doesn't protect the borrower.
Banks are always looking to win out of it, right?
Yeah, well, that's it. It's all about, taking care of their own interests, isn't it? But you're right in what you say. Like, education, particularly for the younger ones, is a massive thing. And I know I've spoken to you guys before. I'm looking at running a seminar later in the year, primarily for first home buyers. So what my aim there is to get a group of first home buyers in so that we can just have a chat to them along the lines of, like I said before, educating them about where they need to be. Gives them a bit of confidence to think, hey, look, I can actually do this, and then when the time's right, and it may be then, it may not be then, but when the time is right, then we can sort of sit down one-on-one and we can look at things on a more individual basis and show them, what the pros and the cons are of doing this. And that will lead into obviously being able to get into the property market. And and then, obviously from there, it's once you get into that property market, you're not home and hose, but you're well on your way, I guess. It's probably a better way to put it.
Well, I guess if there's anyone out there who is looking to, if anyone is out there looking to get in touch with you, Wayne, how can they find you?
Yeah, sure. We're on the web, obviously, like everybody else. It's Direct Mortgage Concept, so it's dmconline.com.au. We're currently going through a rebranding, and we're going to change that slightly. But for the time being, dmconline.com.au is is the handle for the website.
Just remember Run DMC.
Everyone thinks that, yeah. Yeah, so or give me a call. You'll find me obviously on Facebook and on LinkedIn and the usuals. Yeah, but if anyone wants to have a chat, happy to have a chat to them. And as I say, we do a lot of stuff, through Zoom or face-to-face in the office here. So, yeah, happy to have a chat with anyone.
And I guess the other place they can find you is the Hornsby Shire Business Network.
Yeah, that's right, yeah.
Wanted to touch on that because that's, I think, where we
sure.
first met a few years ago. But, yeah, give us a bit of history on the Hornsby Shire Business Network.
So the Hornsby Shire Business Network was brought about, I guess, probably about a decade ago, a bit over 10 years ago now, and it was sort of an offshoot from an existing group who was a lunchtime meeting group, and it's all about local small businesses, people like you and I that there's not an office full of people there, so you might be in the office by yourself, or not very many of you in the office, and it's all about having a very low key, giving people the opportunity to be able to meet on a regular basis. And we catch up for a breakfast on the first Friday of the month at Cafe Lorella up here at Barara. And as I say, there's no membership, no joining fees, and it's all very laid back and very casual. If you can turn up, you do. If you don't, so be it. There's one on next month. And we meet every month except for January, being the first Friday of the month. And yeah, so it's just, look, sometimes we'll have some special guests along as well, but it's more about building relationships with people. So much the same as what you guys are doing with your networking groups. Just to sort of build those relationships. And I often find too that you're talking to people all the time who are looking for various things, and that gives you the opportunity then to be able to recommend somebody that, not just somebody you've heard about, somebody you've actually know and you've dealt with over the years. So back onto the group there, the network group. We, as I say, that was started by myself and one of the other members there, Chris George. And it's sort of, we've looked to sort of ramp that up at times.
Another local legend.
But essentially, it's a voluntary thing like most of these things. And, at the end of the day, you've got to pay the bills first. So, we've sort of got to the stage now whereby, it'll be what it'll be sort of thing. But, we're quite a friendly bunch. We don't bite. And, yeah, so it's more about catching up for those networking opportunities.
Just biting into the Eggs Benedict, right?
Yeah. There's a bit of a thing there with Eggs Benedict.
Always finding
it. Yes, we can read that.
G'day, Pilot Nighthawk. Welcome. Well, thanks, Wayne, for coming on today. Well, actually, so the next group meeting is, what was the date and what time
for the network? Yes, that'll
2nd
be
of September.
Yeah, so for our group, it'll be the 2nd. Yeah, Friday the 2nd of September, and that'll be 7:30 a.m. And we usually finish up about 9 o'clock up at Cafe Lorella at the shopping centre there at Barrera Heights.
Such a beautiful place there. So yeah, perfect.
No, whatsoever. All right, guys.
Excellent.
Thanks for jumping on and giving us insight on what the current market is and where it's sort of going, and giving a little bit of an education on what to do, because there's a lot of people out there with a lot of angst, and there's a lot of fears really just around, but it's a little bit unsettling. And it's not like we haven't gone through this, like in the 90s and then late 2000, and now it's coming again. So it's like every 10 years.
It's all cycles. But look, you always imagine the worst, but when you talk to someone who can give you the right information, you'll often find out that it's maybe not quite as bad as what you actually thought.
It's like the other people telling us that the world's going to end, like in 2000. So it still hasn't ended.
It was going to end years ago, wasn't it? Yes.
It's like those Sharkies being up at the top of the ladder,
And I'm going to have to shut one of these people down. Let's mute him. Let's mute that Sharkies fan. He's gone. That's it.
Oh, dear.
Oh, I'm unmuted. I'm back. Sharkies. All right. Well, thanks again, Wayne.
No worries, guys. Not a problem. My pleasure.
Thanks, Wayne.
All right.
Cheers.
We'll catch you again soon.
Catch you. Bye-bye.
Cheers, Wayne.